So as promised, been watching the National Restaurant Association. The April Restaurant Performance Index has not come in, but what did come in on the research tab was this report on elevated costs continue to pressure restaurant profitability. So total restaurant input costs soared 30% since before the pandemic. So they go on to say that prior to the pandemic, the cost breakdown for a typical independent restaurant looked like this. Food and labor costs were the two most significant line items, each accounting for approximately 33 cents of every dollar in sales, which is pretty normal. Other expenses such as utilities, occupancy, etc., combined to represent about 29% of sales. That left a pre-tax profit margin of 5% for a typical restaurant. So, based on government data and surveys of restaurant operators, the National Restaurant Association estimates that input costs posted double-digit percentage increases across all major categories since 2019, led by 35% gains in both food and labor costs. So then they have these really great charts, which we'll leave the page in the show notes. And I really think anyone who operates a restaurant or is looking to get into a restaurant really pay attention to this, because this is crucial, and it could be a good benchmark on where you should be pricing wise. So for many restaurants, customer traffic is still dampened compared to pre-pandemic levels. So to cover the higher input costs, the average restaurant would need to increase prices by 23.8% to break even on the costs that are happening right now. And so in order to increase prices to make a 5% profit margin, they would need to increase prices more than 30% to maintain that 5% margin. So if you had a restaurant before COVID, before even the pandemic to now, if you have not increased your prices by 30%, you are not maintaining a 5% profit margin on restaurants or on your restaurant. So pretty stunning stuff. I mean, obviously it makes sense. Costs have been insane. And this has, it's not just a tariff thing. That impacts it, but this is like just over the last 5 years, everything that's been thrown at restaurants. Again, costs go up, but price increases are so drastic, and 30% is a lot. 23% is a lot. So, your thoughts on the restaurant report by the National Restaurant Association?
Yeah, it all catches up, right? Like the numbers need that wiggle room. Something's got to give. We kind of touched on this the 2 episodes ago, but I do think that it is something like we're monitoring it. We're continuing to bring it to people's attention because it is something that it is a little bit of a boiling the frog effect if you're not paying attention enough. And then all of a sudden it's like just slow enough. Like it is just, minuscule enough, or maybe it's like, oh, that's not that much. And you just kind of shrug it off. But then you look back over the months, over the quarters, over the years, and you get to this place where you're like, oh man, like we're really underwater here. I guess it does surprise me to hear some of those numbers, like maybe not be as high as I like. The numbers ultimately hash out. I just think maybe how they're bucketing things isn't maybe how I would traditionally bucket it.
Yeah.
But still, the numbers are the numbers. And again, you're making me switch my orders to maybe go into my next story that was kind of in line with talking about what we're talking both on the ethnic food on Michelin side, and then now
Yeah.
these rising costs. Did you have anything other notes to add on the NRA?
I think aside from that, what's cool is they share that so basically there's a new website that spotlights restaurant jobs and career paths called Restaurants Works. It's an interactive resource offering data-driven insights on occupational options, possible career paths, and industry trends, both nationally and for specific regions. So I just thought it was maybe a good positive that if you are looking for a resource on finding work, or what the impact of your career path is, Restaurant Works. I'll share that as well. But very interesting stuff.
Yeah, nice. I popped a chart up on screen here,
Okay.
and we can link this in the show notes as well. I think the name of the research company that came up with this is hilarious. It's called Mordor Intelligence. So we've got Sauron in the restaurant industry apparently, and they came up with this. I'm not familiar with these folks. I haven't really, to be honest, gone through all of the individual specifics, but this chart was fascinating to me, in line with what you were talking about. So this is average order value at full service restaurants in the United States from 2017, and then they extrapolated out to 2030. And so you can
Wow.
see we're in 2025, and I would say that this is pretty accurate. Like
Yeah.
in 2020, pre-pandemic, my wife and I going out to eat, and it's $70 for the two of us at, again, full service restaurant. That's not all that outside of the ordinary. Now it is $47.23 just 5 years later for that same average order value. And then what they're extrapolating, and this kind of lines up with the numbers you're talking about, 30% up, and we get to 2030 and the average order is $65.53 if this trend continues, which is fascinating for me to see. They talked about, popular dishes like burritos, salmon and tuna rolls, edamame. Other popular dishes are rice, salads, and poke bowls. And so they kind of do this. It's a little bit difficult with some of these data sets because they do quick service stuff and then they do what they call full service restaurants, and they do some franchises in here. But there was a bunch of really interesting data points that I wanted to kind of cover here. The first one, and this is maybe the counterpoint, my optimism and I'm not saying you're a pessimist, Ray, but I do think that there is negative news, but then there's also some countervailing, potentially positive news, which is the entire market size of full service restaurants is going to almost double by 2030. And so we're compounding at an 11.33% compound annual growth rate. And so the space is growing, and that's not bad. I think that the other interesting finding here was that full service restaurants are still kind of like keeping their market share, from the sense of almost 30, a third of all restaurants, quick service restaurants is almost half. But full service restaurants, these small independent places, are still like a big chunky part of it, which I think we've talked about consolidation in previous shows where, certain places are closing. But at the same time, I went on Eater today because my wife was asking about a place for lunch for us today. And I was like, oh man, there's so many places that I haven't heard of that are just have open around me. Yeah. And so I think you kind of have both things happening, and that shows in the charts here as well. We had this sharp drop off in 2020, but almost every single year after that, the number has either stayed flat or it's effectively kind of grown year over year over year. And so that's really exciting to hear that more restaurants are ultimately opening. There's more demand for these sorts of things. And the other one that was kind of interesting to kind of talk about was the share of ethnic food in the market, just kind of overall. And what I think is kind of interesting is they kind of lump North American in one cuisine, quote unquote, which again, more to our research maybe needs to be a little bit more nuanced than this. But again, we will link this full report if folks want to kind of read this. But they go into a bunch of different, kind of like data points and break down the data with their own quantitative analysis here, talking about like, is the market overly consolidated right now, or is the market overly fragmented right now? And you can just kind of see some more insights here. Any thoughts on both rising order values? I mean, this was the chart that I really wanted to show, because from 2020 to 2030, it is an almost doubling of, and that's just the what is that? The eighth wonder of the world is compounding that we don't understand. Our brains have a really hard time wrapping our heads around this. Yeah. But this is compounding like crazy. And so I'm kind of curious your thoughts.
Yeah, I mean, I think, can you scroll back down to that, what was the segmented? I think that was interesting a little bit more.
Yes.
Where'd that go? There's like a bar.
This one?
That one. Well, that's very interesting to me. So, like, obviously the United States full service restaurant market, highly competitive. You would almost think that, like, with all the large corporations and whatnot, that it wouldn't, like, that these businesses are being squeezed out, which in some cases they are. But it's also is like the competitiveness of the market is that something that's going to change as prices rise, or as order value rise, as costs go up, and as the average consumer doesn't want to spend as much. Will this bar change? And I would wonder if Mordor, if they were to like guess in 2030 what this bar looks like, because in the fragmented section, will this be more consolidated due to larger companies being able to absorb more of the economic headwinds that they're going to face? So that would be my biggest thing. I mean, I'm not surprised by the order value. It's kind of astonishing how quick it's going to go up, especially from 2029 to 2030 is a giant jump. But yeah, I would wonder what that bar would be like in terms of diversity of business in the restaurant industry, and what's consolidated and what's segmented, and if it's any different or if it's way more consolidated.
Well, what hopefully this allows folks to see is that you do the math on whatever an average order might look like at your restaurant, your check average, however you decide to label it or do the math. And you start to look at this and you say, okay, well, if 50% of restaurants are maybe quick service, or maybe there is a little bit of like, you can see more robust data from a Bloomin' Group or a Darden or a Cheesecake Factory type of organization. And you're saying, okay, well, I'm scared to make sure to kind of put my foot in the ground and say, my check average is $50. But then you look and you're like, oh, well, the average or across the industry is looking like it's going to be like that in 2026. And so
Yeah.
maybe that takes a little bit of the sting off of, again, I think you and I have discussed this, Ray. Prices need to come up, but people don't for fear of what are people going to think of me? It's other people's opinions that they're nervous about, even though the math is telling them one thing. It's almost like this like gut intuition instinct that's maybe driving them in a different direction. And a solve for that might just be just sentiment across the entire industry saying, hey, this is what things cost now. And we just kind of got to get used to that.
One point, this is something I brought up on the solo episode last week. The idea, new data come out that grocery prices falling drastically in certain respects, but comparing that to the rising menu prices over the last few months in restaurants really leaves vulnerable going out to eat in the modern day consumer if they see a big price increase. So that would be my only other like point is it's really tricky right now.
Another just really quickie point before I hand it over to you for your next one. In the research that I was doing, I found a shocking statistic. How much money do you think Chef's Warehouse makes a year?
I mean, I know it's in the millions, but I wouldn't even have a guess, to be honest.
The headline is Chef's Warehouse increased their sales 8.7% in Q1. Just Q1, 950 million. And so the company projects a full year net sales of $4 billion this year.
And the restaurant
Chef's
business
Warehouse,
is hurting.
dude, it's wild.
That's crazy.
That's wild. Not a company I would have thought was a multi-billion-dollar a year company. And listen, similar to other businesses that we're talking about, maybe single-digit profit margins on that, but still, in the billions, that's a lot.
Yeah, that's pretty crazy.
What do you got?
I was not expecting. I was expecting millions, but like you would think with everything going on in the restaurants, it wouldn't be that. But hey,